Good morning. So now the audit committee is going to start our work session, and we have three items. This is a briefing, and also there will be action. So I'm just going to go ahead and turn it over to Mr. DeFazio, and I know Mr. Smith is here as well, but walk us through the decision points and items that we need to discuss today.
Okay, good morning, sorry. For today's meeting, we have three items, of course. We're going to have a briefing from Clifton Larson Allen on the FY18 audits. Then we're going to have a review of the contract amendment to extend CLA for one more year, and then we're going to review the recommendations to strengthen the county's audit and oversight. So first, I'd like to ask CLA to come up. I'm going to turn it over to them for the presentation on the FY 2018 audit reports. Mouse is on.
Well, good morning. Thank you for having us. First off, I always want to just thank the staff at the county that are critical at providing information to us throughout the process. They're usually very accommodating, and they get us information relatively quickly, and we were actually issued earlier this year than we ever have, so that was a good thing. My name is Sean Walker. I'm the principal in charge of doing the county-wide audit and some of the single audit and deliverables. And you want to introduce yourself?
Yes, I'm Jason Ostrowski. Jason Ostrowski. I'm a principal with CLA, and I work specifically with Linda, and we have a separate team that audits the pension, and this year was the first year we also audited separately the Retiree Health Investment Trust, the OPEB plan as well. So I'm in charge of that team.
Good morning. My name is Shannon Weiss. I'm the engagement director over the countywide audit, also the other deliverables and the single audit as well.
Very good. So if we can get to the first slide. Already kind of been through introductions. So we're going to go through the scope of the services, the audit results, required communications that we are required to present to you. Jason will go over the pension results and the OPEB results, and then we'll talk a little bit about some upcoming GASB pronouncements. We already kind of did recommendations here, but I think a couple things that I want to bring to your attention is that all of our services are performed out of our Maryland offices. And we also use FS Taylor as our MBE participant. We've been using them for a number of years. Backwards now. All right, so as far as the results, we have a results dashboard here. We performed the financial audit over the CAFR, and we issued an unmodified opinion. We had no findings, but we did have one management letter comment. And that management letter comment dealt with when we did the physical inventory over at the Little Liquor Control Board. When we were out there doing it, there was inventory that was moving around, and it wasn't in the system exactly the way it was. But we were comfortable with the count and the count process, but we just had a recommendation of some internal control there. We did a single audit. We issued an unmodified opinion across all programs, and we did not have any findings this year. We also did the 911 systems procedures. We issued unmodified opinion there. We didn't have any findings. And we also did 2 AUPs, one over the landfill that's required by state law. We didn't have any issues to report there. And also the AUP for the National Transit Database, which is dealing with your transit systems. And we didn't have any modification to any opinion there either.
Can you please explain what AUP is?
Agreed upon procedure. So that just means that there are procedures that are agreed upon between management and us, and we perform those exact procedures. We're getting all confused by the new technology if we use as AUP. So our responsibility was to do the financial audits. We conducted those audits in accordance with government auditing standards and auditing standards generally accepted in the United States. Additionally, we did perform the single audit, and those were conducted in accordance with 2 CFR 200, which is the Uniform Grant Guidance, is what we often refer to it as. As far as our significant accounting policies, they're all disclosed in Note 1 of the financial statements. As far as this year, we implemented 2 GASBs, GASB 75, which dealt with the recording of the post-employment benefits, or OPEB. And those were booked as a liability in the financial statements. And then as far as GASB 82, which is dealing with some pension issues, which improved some disclosures around the pension. As far as some of the required communications, we have management judgments and estimates. Sometimes in the preparation of the financial statements, management needs to make estimates. And as part of our audit procedures, we look at how they made their estimates and whether they are reasonable to industry standards and appropriate for the county. A few of those are the depreciable lives of capital assets, your incurred but not reported claims, which deal with your health claims, landfill post-closure costs, which is an estimate, our OPEB liability, other post-employment benefits, and also pension liability, and allowance on loan losses. Corrected and uncorrected misstatements. We did have a small adjustment that we passed on, which was dealing with an unrecorded payable in the amount of $264,000. It's not material to the financial statements, but it was found as part of our search for unrecorded liabilities, and it's not material, so we don't feel like that makes the financial statements misleading. As far as other information that is in your CAFR, we do some limited procedures around those. The information, we do not issue an opinion on it, but we do look at it and make sure it's congruent with the information that's presented in the CAFR. As far as qualitative aspects, there was no significant transactions that we recognized in the financials in a different period than what occurred. There were no disagreements with management. Management informed us, and there was no consultation with other auditors or our other accountants. No issues were discussed with management prior to retention. There were no significant difficulties we encountered as performing the audit. And management has made certain representations, which is part of a representation letter or governance letter that was already provided to you about the financial statements. Jason?
All right, thanks, Sean. So now I'm going to go through the results of the employee retirement plans as well as the retiree health investment trust. Again, they issue separate standalone financial statements, and we have a separate audit team that specializes in government pensions at CLA that specifically works with Linda Herman and her team to audit those separate financial statements. So for the employee retirement plans first, issued an unmodified opinion on the financial statements. They do issue a comprehensive annual financial report as well, similar to the county. And so always like to highlight that we do not issue an opinion or render an opinion on the other sections within that CAFR, Comprehensive Annual Financial Report, which includes the introductory, investment, actuarial, and statistical sections. But we do go through the GFOA checklist and tie that information back and forth to the other sections of the financial statements. We also perform limited procedures over the supplemental schedules in the back of the financial section of that CAFR. We issue an in relation to opinion, and again, an unmodified in relation to opinion on those supplemental schedules, which just include a schedule of administrative expenses, investment expenses, some additional supplemental information. We also issue a report on internal control over financial reporting in accordance with government auditing standards, and we identified no material weaknesses or significant deficiencies. And then we'll go through some of the required communications under those audits in a couple slides. The next is the Retiree Health Benefit Trust. This is the first year that there's been a standalone financial statement issued for the Retiree Health Benefit Trust, and so probably the first year you're hearing about an opinion being issued on those standalone financial statements. So within that Retiree Health Benefit Trust is the OPEB plan for the county, as well as two separate investment trusts for the college and the schools. And so we issued, again, an unmodified opinion on those financial statements, and that also has required supplemental information, which includes management's discussion and analysis. We did not issue an opinion on the management's discussion and analysis, which is in the front end of the financial statements. Again, issued a report on internal controls on that audit as well, and no material weaknesses or significant deficiencies were identified there. And if we'll go to the next slide, some required communications similar to what Sean just went through for the county audit. No new accounting standards were implemented for the pension or the OPEB financial statements this year, so it should look pretty similar to your 2017 financial statements. As far as management's judgments and accounting estimates, there's two significant ones really in most pension or OPEB plans that we work with. First is the valuation of alternative investments, and the second is the actuarial assumptions and methods used in developing the actuarial disclosures in the financial statements. And so we reviewed both of those accounting estimates and found them to be reasonably stated in relation to the financial statements as a whole. We had no audit adjustments or past adjustments. And then, again, management was very cooperative and professional. Always a pleasure working with Linda and her team. Make it a very smooth audit process. We had no disagreements with management, and management did not consult with any other accountants during our audit process.
So just in transition, just to talk about a couple things that finance will be faced with on the go forward with the idea of some new GASB pronouncement. There's a new GASB with certain asset retirement obligations, and this is a standard that was created to catch the liabilities associated with potential assets in which you are responsible for taking care of the disposal of. So if you dispose of the office of an asset, tangible property, that would cost money to actually do that prior to, as soon as you're legally obligated to clean it, you would have to book a liability. In the past, that hasn't been the case, only around certain things like landfill and other disaster mitigation or remediation efforts. Then GASB number 88, which is certain disclosures related to debt. You'll see a little change in your footnote disclosures. This actually beefs up any debt that's related to non-public debt. So if you have a regular loan or something with the state where it's not publicly traded, there's additional terms and conditions that need to be disclosed in the footnotes. Most of your footnotes disclose most of it already, but there's just going to be a process to make sure that it's all there. And those are for next year audit. The following year audit, we get into statement number 84, which is over fiduciary activities. It's going to change your fiduciary statement and the way that it looks. It's going to be busted down by pension and employee benefit plans, investment trusts, other private purpose trusts, information that's in a trust, and then there's also a non-trusted type of obligation, which we call custodial funds, and those are the things that you hold on behalf of other people. So there's a process to go through to make sure that we're identifying all those activities and that we are reporting them in accordance with this standard. It should change the look of that financial statement. Then also on statement number 90, on any of the component units in which you have a majority equity interest, there's a different, we just got to go through a process to make sure that those are recorded correctly, whether they're recorded on the equity method of accounting. And so I don't anticipate that being a huge standard here, but we will be taking a look at that probably during this year for 2 years. But so that's the upcoming GASBs. The one that I didn't put in here that is kind of a sensitive one to management is there's a one on leasing, and it's not until 2 years. But one of the issues with leasing is that the county will have to go through a process and help identify all the possible lease, whether operating or capital leases. The new leasing standard basically says if you had an operating lease, those are no longer such a category. Everything will be capitalized. Which means there'll be an asset on the books and the associated liability with the commitment to that lease. And it's just, if you can imagine in a county this large, there's been leases signed everywhere, and it's going to be a job for finance to go through and try to identify those and get their hands around it. And I know we're already starting to talk about what that process would look like. So that's just one other one that I want to make sure that's on there. That's going to be a lot of effort. So other than that, I think we're open for questions.
Thank you. Thank you very much for that report. So, one issue that I just wanted to ask about, as we all know, there have been reports on a, disgraceful and very negative issue regarding a particular employee that was able to literally, defraud the county of about $7 million or so. And a lot of the conversation immediately, at least for me, the questions were, we've been going through all of these reports year after year, and there have not been any significant material weaknesses. I mean, things that have been flagged, we have been able to address, et cetera. And the notion that this particular process was not necessarily structured to be able to identify what occurred in this particular instance. And so, of course, residents also have the same question. And we are going to have some conversations later on about how we can enhance our ability to provide more oversight and capacity to be able to address this. But in your experience, are there particular amendments to your contract or, other kinds of aspects of your auditing process that may be able to flag something like this? Because again, I mean, obviously, many of us had a bit of a shock to think that in an operation like ours, I know, of course, as a very large county government, it was so surprising that this was actually occurring and it had not been picked up. Any thoughts that you have or anything that you can share regarding your own experience doing these kinds of very large audits on perhaps other things that can be included in what you do to add an additional layer, I think, of particular oversight?
Yeah, please let me just hit on that. So in our process, our process of planning an audit, when we come into any organization, we do an overall risk assessment. And the risk assessment is based on a lot of factors. It is financial activity, it is qualitative aspects of each of the particular functions, and we use our industry expertise to say, hey, when we look at this county, where are the areas of risk? Then we take an assessment of the internal controls that are around certain type of activities, like general disbursements and payroll, receipting, capital outlay, and we go through a process to test internal controls for to the level where we can rely on it to reduce our substantive testing. But as part of that process, one of the things we do is we get around to various department heads. We even talk to members of council. And we look at the internal audits risk assessment that they do, which is done where they're identifying risk. And so we continuously use information to assess risk. In an example of this case, obviously, when something like this happens, we say, well, what did we do in that area as far as assessing risk towards it? And then we modify it to go forward. Because obviously, when you look at that particular situation, you have a department whose that's overall annual budget isn't really as significant as the rest of them, and so you sit there and then the risk assessments that were done by the county was a lower area of risk, so and no one really alerted us during the process of anything possibly going on in that area to look that way. But when we look at things now, like one of the on a go forward, obviously we are building in elements of one of the areas that we look now is in programs where outcomes aren't as defined. Where that is one of the areas that we're looking a little heavily in. Is when there's not a lot of metrics around what the results of that particular department does, can we do something different in that area? So we're constantly adjusting our risk assessment by information. That's the thing. The more information you have, the more we adjust our risk assessment, the more we address the certain areas. There are notions out there in the public world of what I would call internal control audits. And a lot of people, and I know that a lot of people talk about that when we get to this particular element. And that's in the area of public companies. That's where that comes from, is that public companies are required to do an internal control audit as part of the Sarbanes-Oxley Act. And they go through and test the effectiveness of the internal controls. And it's very costly. I mean, it's very, very costly because there's a process management needs to go through to actually say, we have looked at internal controls, and then they assert to us that they're operating effectively. And then we would go in and make sure that conclusion and render opinion. That's a very costly process, and anyone that's worked at a public company knows how costly it is, because it's a lot more than just a regular financial audit. So the other part is that when we get into the areas of risk assessment, when we look at other audits that have been done, anything that the county's performed on it, anything that the third party external people have done, we look at those audits and have that feed our risk assessment too. So from a standpoint of mitigating risk, it's the responsibility of several parties. It's management's design of internal control. It is internal audit of monitoring those internal controls. It is an external audit process, and that all works together in a way that we should get coverage. And something like this is actually a shock to everybody.
Thank you. I really do appreciate your thoughtfulness and as well as your observations on this. Councilmember Friedson.
Thank you for that, and thank you for the question. I had a similar one, so I'm glad you mentioned that. I also think it would be helpful just to explain what you see the role of the external audit being, because there's a lot of confusion of what the job of an external audit is supposed to be doing, and without getting into materiality thresholds and kind of getting too deep into the weeds here, I think it would be appropriate, given the events that have taken place, or at least that we've become aware of over the last year, if you could explain what you see and what is kind of the standard for an external audit of a public government, a public enterprise like us.
Yeah, so as far as like auditing, we audit the financial statements. So that's our starting point, is that we look at the financial statements and we say, and I'm not going to get into material levels, but I have to use the word.
You can feel free. I tend to get
that I have-
eyes gloss over when I bring it up. So.
What is materiality to this? What would make a user of the financial statements draw a different conclusion by reading these financial statements is really, I would say, the editorial thing. And we do that through qualitative aspects as well as quantitative. We measure a number and we kind of go throughout. But our goal at the end of the day is to issue an opinion that says these financial statements are fairly stated. And through that process, obviously, when you just inherently, it focuses on larger classes of transactions and larger balances. So when you go through the process, you'll say like, payroll, like we audit payroll extensively because that's a big piece of county government. Construction, we look into construction contract, big piece of county government. So when you look at it, it's a risk-based approach, but it's really to render an opinion on those financial statements. And then there are elements, because we're in government, of what we call compliance. When we do the single audit, we're looking at areas of compliance with federal regulations. As doing our financial audit, because it's done under government auditing standards, we look at if there are any violation of law in the way that would be material around like budgeting protocols and things along those lines, and there are any laws that are on the books. So that's kind of what we're trying to accomplish.
So just to summarize, it's a lot of work, and it's really important work.
Right.
But it's a lot of work that you're putting in to include a letter in the CAFR, the annual financial report,
Right.
that says we believe within a reasonable amount of money that this is a reasonable reflection, a reasonably accurate reflection of what the county's finances currently are. And then in addition to that, you have sometimes a one-off letter that you're sending to say, to the federal government, for instance, based on our review, this seems to be money that is reasonably being spent in an appropriate fashion. I mean, right, is that a fair? Okay.
representation.
Because I just think it's really important, because we've gotten a lot of correspondence, and understandably, there's a lot of concern here, and I think the question has come down to, well, why wasn't that found in the audit? And I've dealt with this at other levels of government and also in nonprofits, where something comes up and, the first question of any board is, well, we hired an auditor. Why didn't the auditor catch this? And I think that there's a misunderstanding of what the role of an external audit is and what we're asking you to do. And I think that it calls for additional financial controls outside of the external audit that I'm looking forward to talking with in more detail later in this meeting. So I just wanted to make sure that we raise that. I'm not sure if now is the appropriate time. I had some questions specifically about the DLC findings. I don't know if there's other general thoughts.
Go ahead.
Is that okay? So it might help if Mr. Dorfman came up, if that's okay. Thank you. So my understanding of the finding here is that this is basically part of the transition of going from paper to automated and a lack of adherence on a, consistent basis to make sure that we were doing that. We found flaws in the department. Is that correct in a broad sense of what we found?
I think it's.
Okay, great. So I guess my concern isn't really the finding, and I appreciate, Mr. Dorfman, the professionalism that you've brought to the department. My concern, though, is that this is, at the state, I would consider to be a repeat finding. This is something that has come up before. In 2014, there was a finding that we had some real deficiencies in this area, which I believe predates your tenure, and so that's not to blame for that, but it does seem like this isn't a new issue. This is something that has been going on for at least 4 or 5 years since we knew there was an issue. So I just wanted to get a sense for, whether, what changes were made from the 2014 finding, and, what happened to the fact that there still were significant gaps that were found in the audit.
Thank you, Councilman. I'd be happy to answer your questions. I'm not sure about how significant the findings were, but what I can tell you is that one of the things that at least I found when I joined the department was the lack of technology that was employed in the warehouse, which in some cases, in many cases, caused some discrepancies in the ability to locate product and to know exactly where the home for some of that product was. In addition, there were racking deficiencies, and so we put up enormous amounts of additional racking, including flow racking in the warehouse, which allowed us, again, to better locate product, not only the initial product that we received, but any reserve product that would come in after the fact. I think the difficulty that we incurred during this audit was the transition of having gone from a manual warehouse, manual tracking, manual control process to one that employed scanning. And so now what we have is full scanning in the warehouse on everything that's received. It not only allows us to know what the original home for the product is, but where the product reserve is to go, so that there's not a problem finding product once the initial slot is not found. It also gives us the opportunity to locate and store product in sections where, and I think one of the pallets that was found during the audit was a pallet of beer that was located as a return to a vendor because it was out of code. And I think that there wasn't a notation as to where that product should have been at the time that the audit was done. So those kinds of controls are already back in place. I'm hoping that there will not be any further management letters regarding the process that we go through in our inventory in our warehouse. The other thing I'd like to note is that there's an importance that we've placed now on cash in our department. And so we recognize by the ability to better manage our inventory and in essence reduce our inventory that we can create more cash for the department and for the county, which we think is an important consideration. So we have a great deal of focus now on the amount of inventory we carry, how we monitor that inventory, how we cycle count that inventory, and the amount of cash that's generated by being more efficient with the inventory that we buy.
Well, I appreciate that. I got a few copies from angry restaurant owners prior to your tenure of the book of the inventory that they were using, and we were about, I don't know, maybe 25 years behind the private sector in terms of automating and turning this into an actual professional operation, which...
Now we're only 5 years behind.
Well, I'll have to take a look at that and determine. We'll have to do a tour and decide, but I at least, appreciate that. I am concerned about the time at which it's taken to make these leaps, but I appreciate the fact that you're at least working on it. There was a reference in our materials about similar to other jurisdictions. I think it's hard to compare to other jurisdictions since we're the only municipal government in the United States of America that controls wholesale and retail in the way that we do from my understanding. But I appreciate the fact that we're moving into a more modern approach, and I appreciate your background in the private sector to realize how outdated some of the systems that were in place prior to your tenure were. Is that are we comfortable with the response that we've gotten from them in terms of being able to alleviate this issue?
I think so. I mean, I know that we'll reassess it next year. So, yeah, we should be in good shape.
Great. And I think in the 2014, there was a recommendation for the council to get a copy of the policies and procedures related to this automation. I don't know if the council has received that. I wasn't on the council until about 13 and a half weeks ago. But if we could get a copy specifically of the policies and procedures, which was recommended in about, 4 or 5 years ago, if we haven't received it today, it'd be helpful if I could receive it, but I think for all of my colleagues throughout the council, I think would be helpful, since that was one of the recommendations. And even if it was delivered, if it could be updated with any changes that are being made as a result of this audit.
And that's exactly the point I was going to make, that we'd be happy to locate and provide you that, but we want to make sure that it wasn't done in light of what and how the warehouse at that time was operating, which would have been antiquated. So we want to make sure it includes all the new procedures and controls that are in place, given the upgrades that we've made to ensure that we have a better control over our inventory.
That's great. I appreciate that. If you could include what, if anything, was provided to the council in response to the 2014 recommendation, and then the updated version of what is being responded to now, based on any changes that have been made, it'd be helpful to see those changes in that manner and see what was presented to the council, if anything, before understanding that I imagine that you weren't there when that was transmitted to the council, assuming that it was.
We'll certainly do that, Councilman.
I appreciate it. So one question while you're here that is not directly related to the audit, but related to inventory, and I think it relates to this automation work that you're doing. I got a copy of the letter from earlier this week that was sent to customers about a change in the ability of customers to go to the retail stores, the wholesale customers to go to the retail stores to get retail prices. Just to summarize for those, since it wasn't part of our packet, who don't have a copy of the letter, essentially the policy, and I just want to make sure I'm understanding it, and correct me if I'm mistaken, but previously, if there was an issue with a restaurant or a bar owner who was getting wholesale products from you or needed something on a last-minute basis, they could go to a retail store, and if they were already an existing customer, they could get a wholesale price for a product that they went and purchased at the retail store. That is changing, and there's going to be a new price that is being put into place. Is that accurate?
Yeah, that's correct, and it is consistent with every other jurisdiction in the U.S. I think what the DLC had been doing for at least 3 or 4 years previously is allowing licensees to come in and purchase product at the price that our stores actually pay themselves. So we have some stores that are upwards of over 25% of their total sales come from licensee sales, which then they make absolutely zero profit on any of those sales. And overall, 11% of our total retail sales out of our 25 stores are licensee sales as well. That is inconsistent with how the rest of the world works. And the reason you may ask is, why haven't you corrected this earlier, is because we needed a lot of other things corrected before we made this change. And so we did it on a timely basis. But let me explain to you real quickly how it does work. Across the rest of the country, there's one of two things occur. Either the warehouse itself does what's called break cases. They'll break cases down, enabling their customers to buy a single bottle at a time, for which they charge an upcharge because of the expense of the labor of breaking down cases, storing additional product in different locations. They charge a per bottle fee. We don't have the space in order to do that. And other locations as well don't have the space to do that. So they have state stores, and their state stores provide that service, and they as well upcharge the cost of breaking down cases because of the fact that there's labor involved, that the stores purchased the product, the stores stored the product, they have labor that goes around the store to have to select the product and put it into a container for their licensees or customers to buy. We've never done anything to cover the costs, let alone make a profit, in ensuring that our stores act as retail stores. And we hold our managers accountable for the financial success of their stores, good, bad, or indifferent. So we stepped back and said, look, it's costing us a fortune to have licensees come in, unlike any other jurisdiction, and pay what the store actually pays. There ought to be some cost of recovering the cost that the store takes. So what we've done is we've added 80 cents a bottle to wine and spirits. And if you take into consideration a bottle of wine at $20, $30, $40, they're paying 80 cents more for that. And 10% off the retail price of beer or the sale price of beer, whichever is cheaper. This never precludes a licensee from ordering product directly from the warehouse, of which there is no minimum order quantities, which again is unlike most other jurisdictions. So if they want to save the 80 cents a bottle, which is nominal, I mean, very nominal, whereas other jurisdictions charge $2, $3 a bottle for the same service, they can order directly from the warehouse, one case at a time if they wish, to save that 80 cents a bottle. So all we're trying to do is recover the costs. We're trying to hold our managers accountable for the financial success of the store, of their stores that they operate. We are a retail store, and the state considers us to be both a wholesaler and a retailer. On the retail side, we need to hold our stores as accountable as a licensee would hold themselves accountable for the financial success of their stores.
Appreciate that. I'd humbly suggest there's very little about our system of alcohol control that is like the rest of the world, but understand that this is, it's part of your effort to professionalize the operation and normalize it. My one concern, based on the percentage of sales that are to wholesale customers, is that part of the reason why the wholesale customers, like restaurants and bars, are utilizing the retail stores because of challenges with the distribution at the wholesale level, that it's slow, it's cumbersome, the orders can show up incorrect at times, and so they are showing up to the retail store to solve some of the shortcomings in the other side of the business. And so I would just hope that that's taken into consideration and that we're not penalizing for an error. And so if there is an error, if you're looking at this policy, since you do control both sides of this business, which is a pretty good gig to have, that if the error is on the wholesale side, if it's on the department, that the customer shouldn't have to pay the premium. If that's not the case, if this is a last-minute change on their end and they have to pay a premium for an added service and, convenience, speed, et cetera, then I could understand it. But I just want to make sure that based on issues that are not of their doing, that they aren't being penalized with a new policy in place that is not being caused by their own lack of planning or their own success or their own increasing in demand at their establishments.
Councilman, if you were talking about 2014, 15, 13, your comments would be absolutely accurate, but this has nothing to do with the efficiencies that are coming out of our warehouse, which at this point are extremely good. As a matter of fact, we have over a 99% fill rate now. Special orders are being served to the customers in a much broader and different way than before. So it's not to deal with the inefficiencies out of the warehouse. It's more to do, and the reason that licensees primarily shop our stores for product is because in many cases, smaller licensees don't want to buy a case at a time. They only sell a bottle every so often. They don't want to spend the money to buy a case. They also, up until recently, the only places they could use their credit card to gain some float were our stores. So they'd use their credit card to buy the product, whereas in the warehouse they weren't able to do so. We've now converted our warehouse to include credit card charges as well. So there lies another advantage that didn't exist before. So I don't think it has much to do with anything coming out of the warehouse. I think we're much better off today in terms of how accurate our deliveries and the product selection of our warehouse. I think it's more that our licensees had the ability, particularly the smaller ones, and there's a reason for it, particularly the smaller ones who wanted to buy smaller quantities, and they would go to our store, and they would treat our store sort of as their own mini warehouses. And we sort of have to stop that practice, other than not stopping it for them to come in and purchase it, but to purchase it at the price in which the store itself pays. It would be like you going to a store and saying, Mr. So-and-so, I know you paid $2 for the bottle you're charging me $4 for. I'd like to buy it for $2. It's just not a fair business practice, and that's all we've tried to do is recover the cost that it's costing us. As a matter of fact, I've only gotten one email since we've announced it. We've gotten calls to our communications center asking for clarification, but we've gotten nobody that I'm aware of who's acted in any noticeably bad way about the policy that we've implemented.
We may need to forward some of the ones that we've gotten to you, but I appreciate it. Thank you for answering my questions and for following through on the audit recommendation.
Thank you, Councilman.
Council Vice President Katz.
Thank you very much, and thank everyone for being here. I do appreciate the explanation for the terrible situation of the $7 million theft. And I guess and I know we're going to discuss it a little later as well, but I guess one of the questions that I have had all along is, it was candidly, I didn't know enough to even think that somebody was not being audited in that way. That I thought that you know, that every department, I understand there was managerial problems and everything, and you know, there's larger departments and smaller ones. But I didn't think that we had to get literally into the weeds to make certain that a checking account was going to someone's home rather than to a business. I mean, in this case, I think it was 4. It was more than one, certainly. So the bottom line on this, and as I say, we need to discuss it deeper, but the bottom line is there a system? Should there be a random checking or whatever, if you can't go to every department every year or every whatever, to determine that someone is watching? Is there a way that we could do something in a more random way, and on some departments? And if so, how much would that be? Would that make sense from what you would have to charge, or what an account, you know, the firm would have to charge in order to protect yourselves?
Well, I think a couple things there. One is, there is a way to get around, and a lot of times that's where internal audit will actually create audit plans.
Right.
That go around and visit departments or whatever. As far as our regular external audit, there is opportunity for everybody to be part of it, because we do random selections for disbursements.
You do,
and so,
okay.
So it's not like anyone's off the hook, you know, but when we do test samples, we do that. I think as far as like, you know, building in some rotation or a rotational schedule as part of the external audit, so that you get some focus from the external audit. I mean, one is, you know, obviously we'll go there if the risks are there, but if we're saying in addition to, there would just be a little extra charge to do that, because we're already there, we're already in the county and doing things, so it's not a lot extra. It's not unheard of either. I mean, I've had contracts before that had, and it was directed as the council would say, I want you to spend more time in this area on this, and they would tell us, and we'd do extra procedures around it. I've had that for some clients in the past. I mean, it's not uncommon. It's just, you know, a lot of times when we go through the bidding process and everything, everybody's like, give us the audit we need to meet the regulatory state requirement. And that's what we come and do. And you hire the industry expertise, because we're better at assessing the risk within the organization, so.
Well, and to the point of a smaller department, obviously there are less eyes on each transaction. I mean, you think that because it's smaller, somebody would know, you know, everything that's going on, but if there's only a fewer eyes on it, then there's less possibility for somebody to, if they know the system, to do the system, which is exactly what happened in this case. So thank you for all your help and concern with us. And getting back to the inventory. So somebody sells, I mean, you all buy, the Department of Liquor Control buys case of wine or cases of wine, and you now scan it in by the case, okay?
Yes, sir.
Okay. And does anybody, when you do, when you do a physical inventory, do the auditors actually go in and count every case? Do you actually make certain that there's bottles in those cases? How does that work?
Yeah, well, the auditors work in conjunction with our staff, in conjunction with with county finance. So everyone's there at the same time, and it's basically done as a team. And I think that, you know, audit views it, looking at the process, is what they deem to be an adequate or inadequate, you know, procedure that's followed. But to answer your question, it's more than just the external auditors that are actually counting the product. It's actually our employees that are counting the product.
And how often does the Department of Liquor Control actually do a physical inventory?
We do a full inventory annually, and then we do cycle counts on a continuous basis. So we cycle count different areas of the warehouse on a regular basis.
And so, and how often, and I know there's breakage, and I know that there's, you know, and of course, this was one of the concerns that we had with the department prior, not that people would say that there was breakage, but there really wasn't breakage. It was somebody who decided to go into their own line of work based on their inventory. How often do we check to make certain that that's not going on?
aside from, I think increased supervision, which we've added to the warehouse, and better monitoring systems in the warehouse, our trucks are checked before they leave. They're secured before they leave,
Each time, you're saying?
each and every night. That's not to say, and
Well, no
it's
system
not
is
a generalization.
perfect.
Every warehouse, as you know,
Yeah.
has some things that may or may not go on. We've caught people who've put, a bottle of something in their pants to try to walk out of the warehouse. But, we do our very best to make sure that those kinds of things don't happen, and that when they do happen, that we take the appropriate action to make sure that we're on record that it better not happen again.
Okay. I think that one of the great concerns has always been about an inventory, is that, where it is and who's checking to make certain that it really is there. I mean, the more automated we became, the less we were dependent upon somebody actually physically taking out a pencil and checking to make certain that that thing is there, so.
Well, the scanning is automated, but it's verified, and then the rest of the automation is what we call voice picking, which is throughout the warehouse, and that includes somebody wearing a headset where the computer's actually telling them what to pick, where to pick it from, and how much to pick, whereas before, it was kind of a communal affair where you had somebody on a piece of equipment, you had somebody walking next to them, and then somebody else yelling and screaming where to go and how much to get. It was just very inappropriate. So I think the controls there are much better. And the other thing I did fail to mention is that for fiscal year 20, we're adding a loss prevention individual, which for a type of business that we're in, both on the retail side and the warehouse side, to not have had a loss prevention person was probably not the very best thing to have, but we're adding that person. That person will be responsible for ensuring that theft and shrink is significantly reduced from whatever level that it's at today. So hopefully by adding that, will help to ensure that those kinds of occurrences are minimal.
And I do applaud the whole idea that you've allowed now the credit cards to be used in the warehouse. I mean, the retailer that had to pay you each time and give you a check or however you worked it, now can maybe pay that same thing in 30 days and increases their flow. So,
exactly.
I mean, it's and I'm sure that the added expense of the discount rate for the credit card has to be figured in somehow into the cost of the goods, so.
It is, but, also, the county finance department worked independently and with us on significantly reducing the costs of the merchant services fees as well. So that was an added incentive for us to want to add that to our warehouse operations, because we were paying a less fee than we were before.
You should have pretty good volume, anybody should want you as a customer.
$100 million.
Yeah, there you go. Yeah, that's a pretty good day. Thank you very much.
Thank you.
Thank you. So I think with this, we're just going to flow into item 2, if you can please.
Second item is a contract renewal for CLA. This will be the last renewal for CLA to complete the FY19 work. We will do a RFP for the next contract in FY20. There's no cost change for this one from last year, and staff recommends approval.
So going back to the comment that Council Vice President Katz made, which is something that I'm also interested in, I think we would like to know, like for you to work on identifying possible amendment that perhaps can address what we were just discussing. It's something that I actually had requested from council staff to do, but we don't have anything to react to right now. But if you could please engage in that and then come back to the audit committee. You can communicate with us, I guess, if we're not meeting, to see whether that is something that we can approve. I know that we have done, consider amendments in the past as well.
Yep, I can do that.
Any questions regarding this particular?
Good with that. Share the
All
same
right,
view.
so we will, no objection, we will recommend that, but then we also want to make sure that we, look into this issue of an amendment. Thank you so much for all your work. Really appreciate it. So now we are going to move on to item number 3. And so this particular item 3, obviously, as we began to hear from our Inspector General, and also we're briefed on the Baker-Tilly report regarding issues of internal controls and what else could we do to enhance our capacity for oversight. Again, as president of the council and chair of this committee, I did communicate with Ms. Michelson that I wanted our staff to begin to look at where would be those areas that the council, in addition to what has been recommended to the administration and the work that they have done already to address many issues, what else could the legislative branch do in order for us to enhance our capacity for oversight? And what we have is, I think, a number of possible recommendations. I also requested from staff to give us benchmark with other jurisdictions or, around us, and that you will find on page 7. And then page 8 and 9, you will also find some other recommendations that the staff has worked on. Mr. Blanchett, if you want, you can go ahead and join us. I think there's some recommendations. There's a particular recommendation that I had discussed with staff that I don't think I see here, which had to do with where to locate the internal auditing functions, and so I will describe that because I thought it was going to be in the packet, but it's not. And before we get into the conversation, I also want to make the following remarks because I think it's very important. When you look at page 7, and I joined the council in 2009 and began as a member of this committee and then became the chair of this committee. When we hit the recession, you can see how the funds that were particularly allocated to internal audit, how those began to erode. And this was a conversation that this committee had time and time again with the administration. As a matter of fact, we also made recommendations for trying to figure out whether the internal auditing functions should remain in the executive or not. And of course, we know that in the charter that is a particular requirement, but we also push very hard against eroding the resources. And time again, we were told that there was enough capacity and that the combination of our internal auditing functions with the external audit firms, et cetera, were strong enough. And the reality was that, we were doing well. And so this committee, again, and it's on the record, people can search all the sessions, when time and time again, this is what we heard. And you see here how this particular function was pretty much eroded for very many years. And so it is going to be really critical, I think, that starting, afresh with the new administration, that we take a step back and learn from this very significant theft, that obviously everything was not all that great. And this is something that we have to take very seriously. So what we want to do is engage in a conversation with you, Mr. Blanchett, but also I know Councilmember Friedson has had conversations about possibilities of what we can do moving forward. Of course, we understand that in order to maybe move the internal auditing functions from the executive, it would require a charter amendment, and that's something that we can entertain, most certainly, but it doesn't preclude us from also exploring creating additional capacity, whether it's going to be in the OIG's office, whether it's going to be in the legislative branch office. This chart on page 7 also describes, I think most jurisdictions have it in the legislative branch, and it's interesting to see that the two jurisdictions that have it in the executive branch tend to spend less resources on this particular function. So obviously, whatever we can read in that, I don't know, but I think the time has come to obviously begin to look at some innovative ways to provide a different structure with a new administration that I know is open to this, and really truly feel comfortable that we're adding all the layers of oversight necessary for us to ensure our taxpayers that we are indeed stewards of taxpayers' money. So with that, let's see. Mr. DeFazio, how do you want to proceed? Do we want to go straight to Mr. Blanchett for?
Sure, that'd be good.
For a presentation? Okay, Mr. Blanchett.
Thank you. Appreciate it. With your permission, I have asked David Newcomer, who was a former Deputy Inspector General under former Inspector General Norman Butts in our office, and is currently a member of the State's Attorney's Office, so he's intimately familiar with both the operations of our office, and he was also intimately familiar with the fraud investigation that you referred to. So he's, in case you have any specific questions, that he may be able to shed some light on certain aspects of the questions that we're going to talk about.
Okay.
I'm not really sure. One of the things that I know that our request had basically been for the County Inspector General's office, had basically been for level funding for the office. But we had discussed a variety of possibilities in terms of enhancing the audit function with a couple of different options. One was the idea of looking at evaluating all of the county programs on a cycle. Our idea was looking at the functions of the office on a 3-year basis, and we went back to the and did a review of what that would take in terms of FTE. We did an analysis of that. Basically, we think that including Montgomery College and the Housing Opportunities Commission, which we believe that we will have some oversight responsibilities for under county code and under state law, there would be roughly 28 departments and 298 programs that we would have to audit on a 3-year cycle. So incrementally over and above the current 7 FTE of the office, we'd be looking at approximately 23 full-time equivalent positions in order to do that with the type of audit that is currently done by the Office of Legislative Offices in the state. Now, the other possibility that we had considered is looking at these audits using a more sophisticated data analytics program. Now this is assuming that we fully staff up in the second year of the audit program. If we were able to use a more sophisticated data analytics program, we thought we may be able to accomplish that with roughly half of the staff, possibly as few as 12 additional positions. Data analytics is a matter of becoming more sophisticated at looking at what we at the anomalies, but also in assuming that we're going to be able to take corrective actions on some of the issues that we found that we had concerns about with the county's internal control programs, which I know that they're working diligently to resolve. I noticed that there were also a few other issues that were recommended, such as having frequent meetings with county executive staff and with county council staff. I did want to address that, and I want to make it very clear that we actually do have frequent recurring meetings with county executive staff. In fact, we have regularly scheduled meetings with an assistant chief administrative officer that's monthly, with the chief administrative officer, and with the office of with Mr. Brogley, who's the internal auditor. We have quarterly meetings, regularly scheduled quarterly meetings with the chief administrative officer, and while Mr. Farber was here, I had weekly meetings with Mr. Farber. They weren't necessarily in-person meetings, but they were in telephone conferences, a combination of telephone conferences or in-person meetings. And I've talked to council staff about the possibility of resuming those on a more frequent basis. So I do think that that's an important thing to bring up, and possibly including them in meetings with the executive staff.
Okay. All right. Mr. Smith?
I guess just to give a little structure to the conversation, maybe going back to structure of the audit function. So, I mean, as we noted in the staff packet, there are, we have 3 functions in terms of audit. There's the Office of Internal Audit over in the County Executive's office. That's our external audit, which we just heard from, that we contract primarily to check our financial statements. And then there's the Office of Inspector General, which primarily works with fraud, waste, and abuse. And as you noted, Ms. Navarro, the packet did go out prior to us having a chance to have a conversation with you. The reality is that staff does believe, like, looking at that structure is an important role. And I believe what Mr. Blanchett has provided information regarding is how to beef up audit functions outside of the executive branch. So I think having more conversation with that, with committee members, staff definitely believes that's a good idea. Noting that the Office of Internal Audit not only has had fewer resources over the last 12 years, but also is dealing with resolution issues within the management and responding to the Inspector General as well as other reports. And so having additional audit capabilities that the council is not only overseeing, but reviewing, staff does believe that makes sense. So we'll leave that there and see if there's additional comments that the committee wants to make regarding that.
Right, I mean, I think it's important to note that, so the charter requires that there be an internal auditor in the executive branch, and that is by charter, which means that, presumably, there is an option that can be changed. That doesn't preclude, though, the creation of internal auditing capabilities vis-a-vis perhaps an internal audit unit under the legislative branch, because when you do look at page 7, you see that most jurisdictions actually have the internal auditing function under the legislative branch. Another alternative, of course, is that, yes, there can be some additional auditing capacity within the Inspector General. Now, at the end of the day, it's all a matter of resources. And so, if there is interest on the council to begin to move towards a structure under, let's say, the legislative branch, obviously it's going to have to be a phased-in type of effort, because we know that we don't necessarily have, unlimited resources to just do it right away. But if that is an interest, then one can begin to do that. And it doesn't also preclude, creating some more capacity in the Inspector General for auditing functions. I think that, that is not something that is going to hurt us necessarily, but I think it's going to be more, what could that particular menu of options look like, and what would be the fiscal impact of that, and then how could we phase that in if that is the desire of the council. And so, to me, I think that's pretty much, what we need to at least begin to coalesce around. But I think it is telling that most jurisdictions in the region do have the, internal auditing functions under the legislative branch. And again, this is not the first time that this conversation has been had here in this committee.
Yeah, I would like to mention that one of the things that, we did visit with most of these entities during the course of my tenure, and most of them are doing a variety of different things compared to what we're doing. We did try to determine whether or not they were doing the same things that we were doing, to make sure that what activities were being covered by those entities in Fairfax County and Prince George's County and neighboring counties were not, were activities that we were covering in one way or another. And one of the things that I do notice is in my opinion, what's being done by the county's current internal auditor is really not the same as what's being done by those entities. I mean, he's basically taking, in most cases, and in my opinion, he's taking a lot of the results of our audits and expanding on them in a way that allows the executive to move forward on implementation of the recommendations rather than starting from scratch and looking at specific auditing activities such as doing continuous monitoring of financial management, for example. What we would be doing is looking more at the specific internal controls, what we're talking about doing, wherever it's housed, is looking more at the internal control systems of the county and the effectiveness of those systems. That I don't think that's really what the current internal audit function is really doing. And I think that's really more what you have in mind, and I agree with that. But the other thing that I would want to mention is, and what staff has addressed here that I think is very important to us, is really either way, and you've brought this up, is really the continuity of effort. And that's really going to be a matter of making sure that once you bring to bear the resources, that those are continued over a longer period of time. In our office, for example, because all of the positions are term appointments, once the Inspector General leaves, all of the positions and all of the institutional knowledge leave, and that creates an organizational void, which is going to create a problem for the county in its ability to provide oversight. And that, I think, is really something that is a no-cost issue for you to address.
Right. No, I agree, and I think we can, we definitely will consider that. I'm going to, I know Councilmember Friedson has some issues that he wants to raise and has been doing some work on this arena. The other point that is also reflected on this packet has to do with contract monitoring and also outcomes, reporting of outcomes. I do think this is an important issue that we need to figure out how we can begin to implement that, looking at, of course, capacity. But this is an issue that was also raised when I first joined the council on another issue with another organization regarding this notion of program outcomes and then fiscal monitoring, and so we do need to figure out whether, I don't know if we can, if it's a bill that requires this, is it just a normal, normal reporting, so that if you do have then auditors, you have something to look at. But if it's not happening regularly, then even if you have auditors, how are you going to be able to then come in and try to recreate all of this? If it's something that is a requirement that that at least on an annual basis, there has to be a particular report that is easily accessible. Perhaps that would be an important aspect for us to figure out how to then require that. So that's another thing I think that we will discuss. Councilmember Friedson.
Thank you to the Council President, and thank you both of my colleagues, and particularly Council President Navarro. We've had conversations about this. It's been a process. This is not something that we should be too reactionary on. I think we have tried to take a thoughtful approach the way that we address these issues. I appreciate the conversation, extensive and robust conversation that I was able to have with Mr. Blancett, and a lot of conversations that we've had with council staff. And I think the Council President really described this well. I think there's two main issues here: investment and structure. And I think in both investment and in structure, we are currently not anywhere close to being set up to provide the type of oversight that a $5.7 billion budget requires. And I think that that's not a new issue, and that predates certainly me bringing it up. The Council President has been on this committee, and Councilmember Katz has been on this committee, and I know this has come up before, but budgets are about priorities, and I view financial oversight as a core function of the legislative branch. It's fundamental to what we do here. We pass a budget and we provide oversight. Everything else maybe in this case, save land use, which is a core, an additional core function of this particular legislative branch, but everything else is in addition to what those core fundamental roles are. And I am very glad that the council president really honed in on this, but if you look at the amount of money that we invest in this, it's insufficient. It's just nowhere near what is required. The cuts that have come here come at a real cost. And I don't just mean the $7 million of theft, I mean trust in the public, believing that the money that we are investing of theirs is being invested in an efficient and an effective way and an appropriate way, and that we are taking care of that money in the way that we ought to be. And I think that that cost is far more than the investment we would make. And I think that we, as a council, I hope, under Council President Navarro's leadership, will really take on this as a core commitment that we have. And I definitely agree that we cannot, should not, and it wouldn't and isn't appropriate to rely on the executive branch to provide oversight. I do think that that is not an executive function. I do think that that is, by its core, a legislative function, and it should be housed in the legislative branch. And just having an inspector general who does great work, and I very much appreciate it, but that's not enough. The inspector general has a very specific role, just like the external audit, waste, fraud, and abuse. Your job is to respond predominantly to issues that are raised proactively. That's not what we're talking about here. And I come from the state level and have the black and blue marks to prove the normal legislative audit process, the department, the Office of Legislative Audits, OLA, that every 3 years you have to deal with an audit, and you have to prove that the money that you're spending and the contracts that you're procuring are being done by practice and by protocol and in an appropriate way. And you do it once, it's an issue. You do it twice, it's a repeat finding. It's a very uncomfortable public hearing in front of legislators that you have to deal with. And I think that level of transparency, that level of accountability is absolutely what we need here. I appreciate, Mr. Blancett, you following up on the conversation that we had about what would it look like to have regular audit functions, and what would it look like to look at every department on a periodic basis. And I appreciate the 3-year cycle, which is what the state does. I also appreciate some type of hybrid of that, of looking at data analytics, and perhaps also making having a judgment, an independent judgment by the auditor and by the inspector general, by the appropriate party, not the executive branch and not, frankly, political legislators, but an outside expert deciding what is the appropriate time frame for a huge department like Health and Human Services versus another department. And I shared the comment that was made, I thought very astute comment that was made by Councilmember Katz about the fact that sometimes the smaller departments are the ones most at risk, even though we don't view it that way from a materiality standpoint, but because there are fewer people who are there to see issues that may arise, and the ability to get loose with protocols is even greater. The ability or the inclination for relationships to usurp policies and practices is significant, and so we need to take all of that into account. And so that is my long-winded lead-in to say that one, I appreciate the work of my colleagues and of staff. I appreciate all the time that we've spent. I have put together with my team some recommendations that include staff recommendations of what I hope could lead to legislation that I would love to work with my colleagues on together. I think reflects some of the conversations and requests I think the council president has made to staff that perhaps weren't in the report. And I'll just quickly review them now, of what we're talking about, in hopes that we will do it. And then second to that, I think the investment piece is the key follow-up. Some of this will come with cost, but I think we just have to make a commitment that oversight is either a priority or it's not. And there are going to be sacrifices for that, and there are budget realities that we always have to face, but this is one that I think, again, is at the core of what we do. And I think as a legislative branch, we have seen what happens when we rely on the executive branch. It's not a knock on any individual executive, but it's just the reality of what their role is and what our role is. And I don't think that we should give up this core fundamental role that we have as a legislature. So the goal here is to create a more fundamental audit process that addresses all sections of all county departments on a regular basis and a regular schedule as appropriate in order to find and prevent waste, fraud, and abuse, and to provide the assurance, just as importantly, to residents that county government is getting the most value for their taxpayer dollars, and their dollars are being invested in an appropriate and reasonable way. And I mentioned that these aren't my ideas. These are, I think, a collaboration of, I hope, of ideas that have come through all of these conversations, some just past ideas that were mentioned and thoughts that were mentioned that haven't been followed through upon. So the first is to create an audit function in the Office of the Inspector General. My view, we had talked about internal audit. The Council President mentioned the internal audit is actually in the charter, in the executive branch. It also really doesn't provide, as the Inspector General mentioned, Mr. Blanson mentioned, it doesn't really provide what we are talking about here. It does risk assessment and heat maps and follows through on that, but doesn't provide the type of legislative oversight of protocol and of spending as I think that we need. We do have an independent agency that is set up for this that, I think makes sense and could provide regular reports to the county council in the Office of the Inspector General. My suggestion is to create a Deputy Inspector General for Audit or a county auditor that oversees this function. Require the OIG to prepare an annual work plan and to provide an annual report on the progress to the council through this committee. And I think it would be appropriate to stagger the term of the county auditor with the term of the Inspector General to provide upper level management of these oversight functions that don't wipe out an entire office and some of the turnover issues that you'd require or that you mentioned. The second aspect of this is defining the role of the Office of Internal Audits. I think we've talked about it as if the internal audits is actually doing the type of work that we've talked about. I think we've now all recognized that it really isn't set up to do that. It's a one-person office and is outsourced to do the work that we mentioned. And so I think we should make that explicit in the county code, that the role of OIA, which can stay in the executive branch, and I think there's a role to continue some of the work that's currently being done, which isn't bad work, it's just not sufficient on its own to resolve issues arising from OIG audits and reports, to basically follow through on the recommendations and to ensure that the departments are actually doing the work that they are supposed to do, so we don't have 5 years later, as we heard earlier, an issue that hasn't been addressed in a sufficient way. We could also require OIA to prepare an annual work plan as well and to provide an annual report to the council. It wouldn't be under the council, but we can require a report to the council, and I think that would be a way that we could actually get not only addressing the issues on the front end of identifying these shortcomings, but also getting a formalized way to see how they're being addressed in a significant way, so we don't have to wait for the auditors to do that. We would have an office that's already set up with outside support and help in order to do that. And then the third and fourth piece are creating oversight of county contracting, which staff in the packet talked about extensively. I think the Office of Management and Budget providing oversight of contracts, and I suggested $200,000, which is the general standard at the state level at the Board of Public Works, which I think is an appropriate standard, but I'm open to whatever number is viewed as appropriate for that, but to have a specific person in the executive branch that is overseeing those contracts outside the use agency, which I think is a serious concern. We had a conversation at the Fed committee about Section G amendments, and learned that there is no uniform way that these are dealt with. There is no single process. These are done on a case-by-case basis, and I think it is concerning that the use agency that has the day-to-day operational relationship with the contract awardee is also the person determining whether or not the sole source should be happening, determining whether or not they're getting what they would want out of it, and I think that that should be, somebody else in county government, but it does to me seem like an executive agency and OMB seems, or an executive function in OMB seems to be the place to do it. We could also get a report of each department's contracts, and I think that those departments could report rather than to the audit committee. I think that those departments should report to the, as staff recommended, to the jurisdictional committee on the council, because they're the ones who actually understand what it was they were interested in particular expenditures.
That was actually Council President Navarro.
Council, I apologize, Council President Navarro. I know it wasn't my idea, let's put it that way, as few of this is. I just tried to meet and consolidate. But I think that is the right recommendation, because it makes sense to have a reporting function to the agencies that are actually aware of the specifics of the work being done. And I think all Section G outside of the number threshold should be included in this contract monitor, because there is an oversight and I think a consolidation of process that is required of Section G amendments, separate from the executive and council grants, because I think independent of that, we are making significant changes to that process, and I think we can separate that out and have a separate process that is looked at. It may be that we look at it in a similar approach, but I think that is on a separate track. I know there's a tremendous amount of work that is being done to streamline that process for those grants. I think there's opportunity for oversight there as well, but I think we can address that in a different fashion. And then the last piece is just an annual report on agreements, which was the council president and staff's recommendation, one or the other, or possibly Councilmember Katz, I'm not sure. But we had talked about it in some meetings, and I think these agreements, which are similar to contracts but slightly different, but making sure, this is an area where departments get into agreements, and there has been a lack of oversight over what those agreements are, how they're being followed, whether or not we're getting what we expect out of them, and whether or not they even should be the type of agreements that are being engaged upon, or whether there's a more appropriate way to procure those goods and services, or to engage in that type of collaboration or partnership. And so I think that making sure that we formalize that and have a report of those on an annual basis to the council would also be appropriate. So these are the four main areas. I think, it's not exclusive, but I think that it's fairly exhaustive of the conversations that have taken place over the last several months since the Inspector General reported to the full council, and I am more than happy to and amenable to make adjustments, but I'm hopeful that we can move forward and come out of this meeting or in subsequent conversations to actually put forward legislation to create a structure that reflects the priority that I think we need to have that will restore and instill confidence and trust in the fact that we are managing taxpayer dollars in the most appropriate way possible, in the most efficient way possible. And then separately from that, during the budget process, I think we're going to have to fund this, but we're also going to have to provide the appropriate funding for this type of expense, because I think it needs to be a priority, because I think taxpayers rightfully expect it to be.
Okay. Well, thank you so much. That's very extensive and I think very comprehensive. I assume that what's going to happen now is that there's going to be some type of work that will go into whether this is going to be a piece of legislation. And I mean, obviously, if that's what it is, then we're going to go through a legislative process of, working through it and figuring out, how much we can require in legislation, how much is going to be through regulation, obviously. But I think it pretty much, I think, covers a lot of the things that we have all discussed. I do want to say, that because I've worked very hard with my previous colleagues, that it is important to note that through this committee and with the support of the council, particularly with the Inspector General, I think this committee, with the changes that you see, almost a 48% increase in funding, is because we do take very seriously our oversight responsibilities on the council. With the internal audit, of course, this was a function of the executive particularly and specifically, and we tried, and, there was a different direction. But, this particular 48% increase in resources, even at times, Mr. Blanson, where you used to say that you're okay, that you have the capacity, this committee kept pushing forward because we felt very strongly about it. But I do believe that with a lot of those particular details that you have shared, that we can look at what will be the form that this will take in terms of whether it's legislation or whether it will be, regulatory recommendations, and we can see then where we can go. I think it's interesting that the Board of Education just very recently changed their internal auditing structure, and now it's under the Board of Education, and it has 6 FTE, and it has money for contractors. So, I still believe that at some point our legislative branch should have something similar to this, but I also have to be realistic. I mean, our resources are going to be limited. And so, if we can figure out this phased-in approach of where is it that we can begin to add that capacity, and then see whether, in year 2, then we can begin to perhaps then increase the capacity in the legislative branch. I mean, I'm open to looking at that, but I'm also realistic, and I know that I'm not sure, that we'll have $6 million or $7 million right away to get to the ideal state, but I think that, doing something, it's going to be better than the status quo, and I'm very open to that as we get into a very, I think, dynamic budget conversation coming up very soon. But I do think that overall, there is interest in going this way. So.
Sure. I was just going to say, what we can do based on the committee's conversation is work with one of the legislative attorneys in draft legislation related to these elements to share with the audit committee. And we could look at it a couple ways, whether in terms of the audit, whether the audit functions in IG or a separate office, let's say, including noting areas where the council could take action for reporting through legislation, and also note maybe that could be done a different way, and then the audit committee could review those, and as a unit, recommend what it wants to put before the council. So that's what I'm hearing. And then included with that work would also be, as you were saying, a phase-in approach. So probably 3 to 4 years of how do we ramp up any new staffing needs for these functions, and include that with any of the legislation that is proposed. So I just want to make, that's what I'm hearing, that's what we'll go do.
Yeah.
Perfect.
Yeah. Yes, Ms. Kasiri, yes.
Just one clarification. First of all, I appreciate you recognize the need for the internal audit. But as far as the function, CAO strongly believes it's not, the audits that we do, it's not only just to implement IG recommendations. That's part of it, but we do have our own proactive approach. We have a risk assessment, we have a high risk, mid risk, low risk, and it's very important for CAO to have that, to be able to, I mean, this is a big government. And we do recognize, you're absolutely right, adding resources elsewhere to increase the council's oversight. But as far as the internal audit function, we strongly believe what we do is it's much so needed, especially now, but it shouldn't be just turned into something that's going to implement just either IG's recommendation or other recommendation. That function already is going to be there. We are going to do that. All the recommendation from OLO, IG, or other entities, of course, will be implemented. But CEO strongly feels that he needs that resources to be able to do what he needs to do to proactively make sure we are, because currently, even if you look at our audit program, there are many proactive auditing that came out of our risk assessment we did. So just wanted to clarify directly.
No, I appreciate that clarification, and I don't think that we are necessarily disagreeing with that or, trying to take that away. I was kind of just sharing, what are the menu of options, but I do recognize that having that function there does have, an importance. Of course, when we talk about the size of our government, it is clear that we have to enhance that type of, oversight capacity and those other functions in different areas. And so I think that's what we're saying, is that, enhancing and building on what's there. And this is to be proactive. I mean, this one, issue and one incident is very, very tragic, and it was just uncalled for. But I think that it's also not fair to, paint this broad picture and say that somehow, both on the administration side and on the council side, our, mandate for providing oversight somehow was not executed, because I think everybody takes this very, very seriously, and people work very hard. And I will have to also say that as somebody who has, traveled to rating agency meetings with, staff from finance and OMB, they're one of the top and most finest professionals I have ever had an opportunity to interact with. And that really says a lot in terms of the very, comprehensive examination that rating agencies undertake to look at our particular ways of running government, et cetera. I mean, it's very thorough. And so I think it's also important to recognize that. But it is all about continuous improvement. And so, we want to be open and transparent and understand that, yes, there was definitely a weakness, there was definitely a gap, and somebody took advantage of that.
Yep.
That's what's really disgusting, is that this person took advantage of that. So we want to be proactive and build that capacity. So this is what we will do. Anything else that you want to say?
Yeah, I just wanted to clarify. I was suggesting that the work that internal audit does has a role. I mentioned the heat maps, which is what you're referring to in terms of risk assessments and the follow-through. Those are the two functions. I think there's value there. I just don't, I think that can maintain, and I think our conversation here, just to clarify, was that role can continue. We had talked about beefing up internal audit and moving it to here, and I think that's where the kind of change in thought process came, of whether or not that is appropriate, of what the type of audits that we're talking about are appropriate in the executive branch. And so that's where this came in. And so I think that, we share the interest of the CAO to continue some of the work that's being done. I just think that we need to beef it up even more and have a different focus to the overall financial oversight that we have, to make sure that there is the regular and periodic oversight to ensure that we are instilling confidence in the public. And I hope that it wasn't unclear. I appreciate the work that the prior council and prior councils have done, particularly on the Inspector General, where you can see the interest in putting the money back in. I think this highlights the fact of why it's so important that it not be an executive function, that it either be an independent function like the IG currently is, or a legislative function, both of which I see as the legislature is more inclined to take ownership over things that are outside the executive branch, because understandably, the executive recommends a budget, and if he doesn't or she doesn't fund a department because he or she doesn't believe that needs to be funded additionally, there's generally not a whole lot of interest from the legislative branch to say, well, we think you should add money to that particular budget, and here's how you should spend that money. And so that's, I think, the whole reason why we're having the type of conversation we're having and looking to make the type of changes that we're looking to make. And, per the council president's comments, I'm hopeful that we can take this conversation and work together on a comprehensive and collaborative piece of legislation to present to the full council. So I appreciate your leadership.
Of course. Thank you also for all your work, Councilmember Friedson. All right, so with that, are we pretty much wrapped?
We will, and we work post-haste since the budget is upon us.
Our lives will be suspended in animation. Thank you so much. Really appreciate everybody's time. Thank you, Mr. Blanchett.